Good afternoon, everyone. This is my first attempt at making a video, so please be patient with me as I continue to learn the ropes here. The focus for this short little video is on the S&P 500, and it's particularly relevant as in the last session, the S&P 500 touched on a new all-time high. But before we go to current price action, I'm showing a period of history for the index to illustrate what is understood to be the three main stages of market activity. Dow theory refers to the three main stages of market activity as the period following a downtrend where there's some sideways consolidation, as accumulation. And so this is when sellers have been exhausted, there's a bit of sideways consolidation, and people then starting to buy back in to price action. This is then usually followed by a period of upward movement or participation up. And when this period of buying becomes exhausted, that's when sellers start to step in, and that's referred to as distribution, and that's often a sideways choppy period of market activity, which is then followed by selling, which is referred to as participation down. And this period of participation down is the period known in history as the global financial crisis, the period from roughly around 2008 down, and it finished in early 2009. And it is this period here of distribution prior to the sell-off that became known as the global financial crisis that I'd like to focus on. And to do so, I'm just going to expand this a little bit. After this period of upward participation, there was a new high printed. And after that new high, there was a fairly reasonable correction lower, which was then followed by a recovery, and it was a V-shaped recovery. And there was a new high printed before the selling set in that became known as the global financial crisis. And it's interesting to note that this period of distribution prior to the global financial crisis sell-off, it went from sort of pretty much mid-2007 to early 2008. So it was roughly, half a year of choppy, fairly sideways action. And this has significance for the index in its current form. So I'm just going to switch to a different view. And this is the most recent price action for the index. And this shows, this is the global financial crisis in perspective. It shows just, looked pretty big before, but puts it into some perspective here. This was the end of the global financial crisis in early 2009. And since then, there's been a lengthy participation up. And it's this period here that I want to bring your attention to. We had an all-time high printed, and then we had a sell-off. We've had a V-shaped recovery, and now we're getting to the previous all-time high. And in fact, in the last session, the index did sort of have an intraday all-time high. And not that history will always repeat itself, but I think it just bears remembering that this price action, this kind of activity here, at the moment, it is very similar to the price action that was evident just before the global financial crisis sell-off. So it just bears keeping in mind that we've seen this activity before. So if there is to be any further sideways choppiness and weakness, it just bears remembering that we have seen this type of activity before. So that's basically all I'm interested in pointing out. As a technical analyst, I like looking for patterns, and this is just one pattern I find quite intriguing. The fact that this all-time high was followed by a sharp sell-off, and then we're now printing new all-time highs, and this was similarly seen back in the 2008 period, just prior to the global financial crisis. All-time high, pullback, V-shaped recovery, new all-time high before the sell-off. Okay, as I said, the fact that we've seen this in history doesn't mean it's going to be repeated, but it's just a bit uncanny how the current price action we are seeing bears a remarkable similarity to the price action prior to the last global financial crisis sell-off. Okay, so just keep that in mind. That's all I'm suggesting. Not making any predictions, just suggesting you keep that in mind. Thank you. Thanks for listening.